We are in a very interesting market. I'm going to call it a fragmented market or fractured market, whichever word you like better. So typically in real estate, and what I mean by that, let me dive into that. When you look at real estate, people tend to think that it goes up and down nationally. Like every market kind of goes up and down at the same time. And that never really ever happened. It happened to an extent. You have these linear markets, these lower price markets like in the Midwest, in the Carolinas that never really change that much. But in other markets, in markets like Florida and in markets like Arizona and California and Las Vegas, where you have seasonal markets, and depending on how the economy is doing, those would go up. Those were cyclical markets where they would go up and down a lot more than other markets. Now we're going into fractured markets. And what we have is people moving from California. There was a big boom, people going from California to Boise, Idaho, and Boise, Idaho, the prices went through the roof, and now they're actually falling. They're falling now when other places are still going up. San Francisco is falling as well. And I think that large part is politics and what's going on there and the price point, people getting priced out. So people are moving elsewhere. Whereas you have Phoenix, Arizona, that market's still growing. You're getting a lot of California people moving to Phoenix, Arizona, a lot of them moving to Texas, a lot of them moving to Tennessee. We had an outflow, some to Wyoming and Montana. Again, not big populations, no states, but you do get an outflow to those areas. And what we're going to do is see that continue. And the trend will continue from the Northeast down to Florida, down to Tennessee, down to North and South Carolina. North and South Carolina, very affordable markets, nice areas to live, a little bit better weather for people that live in the Northeast. So they're going to appreciate that and want to move there and continue to move there. So I think those markets will continue to grow. You got areas like Raleigh, North Carolina, which is basically another tech area growing in the Northeast, in the Southeast, I should say, right? It was Silicon Valley had moved somewhat to Colorado, Denver, Colorado. Now it's also going to Raleigh, North Carolina. Eventually it'll kind of be all over the place, but Raleigh and Durham area has really gone up and will continue to go up probably over the next couple of years or so. Florida will continue to have a buildup for at least another year, if not two. And there will be markets where it decreases, Miami, where it just gets overpriced and it's also overpopulated. You probably have more inventory available in that market than you do, say, in Orlando or in Tampa or in Jacksonville or in Cape Coral or Fort Myers area. There's a lot of different areas. Florida has a lot of different markets in it. And it's a very, very interesting state from that perspective. And you can see if you look at it county by county, where the hot county areas and where are the ones where it's not as hot. And obviously, Tampa is a very investor-friendly market. So you have a lot of people buying in that. It's not just owner-occupied people, but a lot of investors buying and having rental properties in that market. It also continues to Lakeland. It's also in Orlando as well, as most Disney World, right? So you have a lot of short-term rentals there. You have a lot of rentals just in general in that market. So very, very interesting. And then Tennessee, if you go to Nashville, it is just blowing up. Every time I go there, it's just growing more and more and more. There's more buildings being built, more cranes out there building high rises. Not really necessarily high rises, but building some larger buildings out there. So it is really, really growing. That market will continue to grow.